Hey guys, this is Andrew for TRENDLINES.com. So I've been working as a professional trader for the past 6 years in Hong Kong, and I've just started to make some YouTube videos because guys, I want to pass the knowledge. I want to show you every tool and techniques that pro traders use at work to make money on the markets. So I want to discuss everything here with you, and most importantly, I want to show you how to do it yourself. So in this video, I'm going to make a complete analysis of GameStop. Let's get into it. Alright guys, I'm actually doing a few videos in the same time today because today is my day off. As you know, I have a regular job and unfortunately I don't have that much time to make my videos. I'm not sure you've seen it yet or not, but I've just done a video where I'm telling you guys what I would have done during the sell-off and rebound. I'm not going to repeat it here, but in this video, I'm going to use the same techniques that I showed you are working, that if you use them like properly, if you have a plan that you build up before the price action happens and you just stick to this plan, you're not losing money and most likely you're making money. And here I'm going to give you some levels. Again, there are rules that need to be followed, and if they are following this plan, things are going to go well. So the plan is, first we analyze the situation. What happened here? We had some bad news. I checked the news. The only thing I found, is like just some articles, some fundamental articles like this, So it's basically some analysts that downgraded GameStop from neutral to sell the day before the sell-off that happened on Monday. Those guys that are just, using like some reverse discounted cash flow method. So for those who are not aware of this method, it's like a valuation method that consists of considering that the future cash flows of the company are actually what it's worth. So basically you compute all the expenses, all the earnings, you just discount everything. So you compute the expected earnings for the 10 next years and you discount it using the rates. All right, the rates are close to zero today. So just consider that all the money the company is going to make for the next 10 years is what it's worth today. And when those guys, they do this, they consider that, for example, for an employee price of 350, they need to have, some crazy revenue of 17% a year, some stuff like this. So they just say, this is insane. This is not possible. They call it the danger zone. All right. So the danger zone is for them the price above which GameStop is overvalued, and they say it's 45. It's very funny, guys, because 45 is my strong, actually long-term support, guys. It's at 49, guys. So this is the level we won't be trading below. And those guys call it danger zone. I call it the bullish zone. It's where, in my conception, when we are trading above 45, things are doing well. In their conception, when we're trading above 45, it's a danger zone. All right, those guys, they don't get it. They don't understand how trading works, that, it's about the market is looking forward and people don't buy, because they think it's going to be worth this in, 10 years. They buy because they think it's going to go higher. That's it. End of the story. And this is what I'm doing, and analyze the flows. The flows are telling me what people are going to do in the very soon future. So whatever. This was the bad news we had here. So some analysts say, yeah, it's going to go lower. So some people freaked out and just sold and, panicked and sold. Now, we had this huge rebound. So once again, I told you guys this in my older video. You don't buy when it's going down. You don't try to catch a falling knife. This is a saying in finance, and we've all tried to do it. When it's going low, it's like -2. For example, I'm trading indices. So if it's like -2, -3%, it's like levels you consider are worth buying because, you want to buy this dip. But the truth is that sometimes it's going to close at -5 or -6. And if you bought at -3, you just got hammered, destroyed. So you can't do this. So you need to wait for some short-term reversal signs and go check out my other video. Here I had one and I would have bought at 142. Then we had this huge rebound, all right? That is nice, beautiful rebound. Let me show you something. I'm pretty sure even the MACD, which is a very early indicator, would have been lagging here. All right, so that's why you need to use trend lines on shorter time frame to get these moves, all right, to get in these moves before they happen. Here, you know, the consolidation was here, so you would have bought, as I said, around 142. What was the huge rebound reason? Here's why GameStop stock soared today. Let's read, let's see what these guys think, you know, then I'm going to tell you what I think. The video game company is taking steps to eliminate its risk of bankruptcy and bolster its turnaround prospects. It means basically that GameStop are gonna pay back the debt, their senior notes, with a principal amount of 200 million, all right? So basically they are in debt, they owe money, you know, because they issued some debt, they raised money through debt. And right now, probably at quite high rate, because this company is, you know, not very secure for investors if they put their money in it. So probably, I don't know, maybe between 5 and 10% a year. And actually, they're going to just emit some shares, you know, just a few shares to pay back the debt. You know, 200 million is like around 2 million shares. The total float right now is 54 million shares, I think. So just 2 million more shares makes 200 million and they can pay back the debt. So of course it's good. Of course investors liked it, all right? It's very good news. It means, you know, they're using the very high price. They actually use all this money that they can raise thanks to a high level of their stock price to actually change a bit their business model and, you know, just clean their accounts. So this is good. Of course, this is good. But the truth is, guys, nothing that impressive. You know, basically they're just going to emit shares. AMC has done it, guys, you know, from 80 million shares to 400 million times 5. All right, here we're discussing 2 million shares compared to 50 million. So it's like 4%. It's nothing, guys. So this is not a news. The market is just bullish. This is what a trader like me would tell you. This was not a news. People were just buying this dip here. This is just what happened when the market is bullish. You know, all the good news look better than they are. And if the market is bearish, all the bad news look worse than they are. I use the news just to assess the sentiment. And when I see that on such news, the price action development is that good, to me, this is a very bullish sign. So right now, I come back to the technicals. What are we guys looking for? So now we understand that here some analysts say, oh, it's going to go lower. And some people panicked, fair enough. And then some people bought the dip on a news that for me is random. So we got back to where we were actually last week. But right now we have a MACD, look, the MACD on the 4 hours time frame that is turning green. So let me zoom in. You see the MACD, guys? This is the MACD. Look at the past. When is the last time you saw it green? And last green only like 3 or 4 days. It doesn't happen. The cycles are around 10-15 days minimum, sometimes more. Here it's like the least of them, and we had just a little bit, and it actually just before the huge like short squeeze, and we had just a little bit of bearish sentiment coming back here, but we basically remained bullish and strongly bullish for a month. So here, guys, when I see this crossover, that is the MACD signal given on the 4 hours time frame, it makes me think that we're gonna just break out this resistance. So before that, let me show you guys what we're looking for. What is the situation? The situation is, so one wave, second wave, third wave. We want this wave to be finished. So for this wave to be finished, we need to break out the level. So what is the level here? I just connect this high and this high. Once again, guys, I use ELLIOTT wave theory to build my scenarios. So as you can see here, I was seeing a triangle. It's not a triangle anymore. It's an ABC now. It's a zigzag correction. So I'm just adapting, and I'm doing this because I like to see clearly where are my waves. You can be wrong about where the wave is going to go to exactly, but it's still the same wave. You know, my triangle is a zigzag, but the highs here are still the same, and I still have here my overhead resistance that is right now at 173, 172. All right, so I have one of them. I like to have many signals telling me the same story. So here I have one resistance at 175. I have still this resistance by 175 that I have here, guys, for a very long time. You can see if you have watched my previous videos, guys, this level, here, this level, I mean, this resistance and sometimes support. Here it was support, is a very important level in GameStop price action. All right. So for those who buy or sell, I mean, mostly buy GameStop, you know that you feel good when you are above 175, and you don't really know why. I'm telling you why. It's because above 175 we are bullish. All right, and you feel it. You don't know why. I'm telling you why, guys, because it's a major support or resistance depending on which side of it we are. So we have this 175 that we always had. We have the 175 coming from this trend line. So a second one. And guys, I told you as well, you can go and watch my videos I did like end of March. I was telling you guys that, you know, when you look at moving averages, so here the 50 moving average, period moving average was actually acting very well as resistance the whole way down. All right, I'm not gonna do it with you again, but we have many reaction. It has never been broken, never. Sometimes, you know, it's broken here, but never confirmed. We never confirmed a breakout above this 50 period moving average. And surprise, look at what happened yesterday, guys. We just went right 173. So we have actually three resistance level given by three different methods that are at 175. On top of that, we have the MACD that is turning green. And as I've shown you guys, the MACD usually doesn't stay green for only 3 or 5 days. It's usually cycles. So something is telling me that we are done with this bearish cycle. So here the MACD was red for 10 days. So sorry, it's not days, it's like candles. So it's like 4 hours. And so something is telling me that we're done with this cycle. One more thing, of course, we have the expiry. So I'll show you this very quickly. We have the expiry. We are at 160. So what is the short interest? Sorry, here I change. Of course, I use when I compute my short interest as a percentage of the market cap, I should use the total number of shares available. So the float share, which is 55 million, I was using 70 million. Sorry, it was a mistake. And I have corrected it right now. It doesn't change much about everything I said, but it just, you know, let's do things properly. So here I put back 55 million. So right now we have 7% of short interest, of synthetic short interest. And as you can see, the 200, so we are at 160. So the shares, the short interest is concentrated at the 800 strike. And the number of call options we have, the April maturity, this is the one I'm interested in, the 16th of April, is huge, guys, huge, but we won't go there, all right? Let's be realistic. We won't go to 800, so this is dead, guys, all right? So I can get rid of it. It won't change much because this had 0 delta, so it won't change much. The short interest right now is just changing the gamma. And where do I have some gamma? At the 200 strike, I have 5,000 options, which is not that huge, guys, all right? So, of course, there is some gamma, but look, if we go to 250, for example, the short interest goes from 600 million to 1.5 million. So it's like around 1 billion. It's substantial, guys. And this is coming in 2 days. So this is what we are going to see. We're going to see this kind of bullish momentum happening if the price action goes higher. So once again, I come back to my technical analysis. And because I'm just showing you guys that I have one more reason to think that if we break this level, the 16th of April is coming. If we break this level, we're going to have a lot of bullish momentum coming from day traders. And we're going to have this bullish momentum coming from the market makers, the hedge funds that are short this 200 call strikes that are going to need to buy, not to get destroyed with the crazy bullish price action. So I'm looking for this breakout. And if it happens, guys, if you want to buy, don't buy here, guys. All right. What would happen as usual is we break, we retest, and we go higher. So you buy the retest, guys. All right. Here, when it was time to sell, you don't sell 160. You wait. And I showed you this, guys, when it comes back lower, then it comes back to 160, then you sell. All right. You always play the retests. You don't play the breakouts. So that's it for me. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.